Good afternoon, everybody, and welcome to another VEF portfolio interview call. And it's the second one we've done this year. Early this year, you were lucky enough to have insight from Sergio Furio, who's the founder and CEO of Creditas, our largest portfolio holding. In this interview, I'm very happy to take a different track. We're actually going to focus on one of our rising stars, and that's the story of Omair Ansari and Abhi. At VEF, we don't normally do early stage or seed investing, but we do make exceptions in exceptional circumstances, and this is clearly one. 5 years on, we're very happy with this investment, and I'm very happy to introduce you to Omair and his story at Abhi for the first time. Omair, how you doing?
Good. Thanks for having me on, Dave.
Cool. Pleasure, pleasure. Well, the floor is yours, Omair, as opposed to mine. And what I'd love to do, first of all, is just because it's the first time you're going to be speaking to our investor base or addressing them for the most part, can you just give us a few minutes on your backstory, who you are, and how Abby came into formation? That'd be great.
Yeah. Again, thanks for having me on. And every time I do these, it's slightly different from the last. I'm supposed to have it down packed, but the evolution changes. The truth of the matter is, so immigrant family, moved around a lot while growing up. Never spent more than I think 4 or 5 years in one country while growing up. Across emerging markets in general, which in reverse seems interesting given what I'm doing. And then, yeah, finished university and went on to the world of investment banking. My father was in commercial banking. I decided to go the more interesting route, at least what I thought was more interesting. And very much randomly from the beginning ended up being focused on emerging markets, but from an investment angle. Along the way, I'd say it wasn't your straight path. I was never smart enough to get into a great school. I was never smart enough to get into a grad program. So kind of had to hunker down and try and punch above my own weight to get myself in. And had a kind of random journey through investment banking of buy side to sell side to buy side to sell side to sell side to back to buy side. And that's obviously where you and I crossed paths, and where it became super interesting for me, at least seeing the things that were happening in Africa when it came to fintech, specifically the likes of Safaricom, etc., and what they did away from the banks was something which was I found very cool and interesting, and that was replicating itself across the world as well. And so went down that rabbit hole quite a bit. And then when I finally moved back to the buy side, I ended up having the privilege of being able to go and see that happening at a much later stage, everywhere from Brazil to China to parts of Africa. And it wasn't just a cute anecdote anymore. It was
It's real.
seeing real change happening from a operator perspective of challenging what the traditional norms were, where no one thought that a bank could be born out of a telco. No one thought a bank could be born outside a bank without looking like a bank or feeling like a bank, which is what everyone kind of hated in that generation. So, yeah, then there was always this kind of, I think, itch in me along the way to and I think over time learned that it's imposter syndrome to some degree of seeing operators and across the table for me, and here I was as an investor, and we all pretend we're smart as investors to kind of provide the feedback mechanism and what you should do, etc. But until you kind of walk and talk as an operator, you don't actually know. So it was kind of a challenge on one end that I always had an itch to try and build something, and I wasn't quite sure along the way what that would be. And then the second aspect of it was just seeing kind of a large opportunity set of what has been built from these other operators in different markets. And Sergio is kind of a North Star for me personally, and Creditas in general. Well, I know I only crossed them when I was working with you at VEF for a little bit. But the idea for me was very simple. I came out to the region. I was living in New York at the time, and came out to first to Pakistan to try and actually first look for an investment opportunity. And came back to New York. We got on a call And then we met, and I said, "There's nothing really out there." And then that's, I think, to be fair, where you kind of threw it back at my side, and I think I was waiting for that kind of pull mechanism to come in, and said, "Well, if no one's doing it, why don't you go and build something?" And so, yeah, that's kind of the beginnings of the story. At least I got scared a few times in between, got cold feet, didn't do it, and then eventually did it. And so. That's kind of the backstory, my backstory at least, and how I jumped into building
Love
Abhi.
it. Love it. Look, easier said than done. And in many ways, it's easier to be an investor and say, go do it, here's the capital, than actually quit your job and go do it. But I'm 100% grateful that you did. And it was an investment based on trust, ethics, history, but also based on a long duration into the founding of Abbey and back and forth on the details. So it was a very de-risked early stage bet, which obviously gave us great comfort. I think it would be great for the audience and our investor base, whereas maybe at this point, it's been 5 years since that point. So a lot has happened. We're a much more mature company, albeit still early in the journey. Maybe you can share a few slides, talk us through, what is Abby? What have you achieved in this period, over the last 5 years?
Absolutely. Let me just share my screen. Let me know if you can see it properly.
Perfect.
Excellent. Um, so, Abhi. For those of you who don't know, Abhi means now in Urdu, Hindi, in Arabic, and certain dialects, it means I want. But the original aspect of it was now. Um, in fact, at first we called it Abhi Finance, but then I didn't like that because it sounded too banking-esque. So we just dropped the finance. I guess it's kind of like the Facebook and Facebook. Maybe that made all the difference. Who knows? But the idea was what we after the many years of at least on the investing side, what was very clear was that credit-led fintech was something that was very important and scalable, and what was really required in a lot of these markets. And the truth is that a lot of firms do not service the segment that truly need it in those emerging markets. And so that's the genesis of Abi, is saying we wanted to go out to be able to build the neobank for the under and unbanked across markets, but starting off with Pakistan. So the problem was very clear. The problem was that individuals and businesses, and at the beginning, it was just individuals that we focused on, have a huge problem when it comes to accessing credit. You look at credit penetration to GDP for Pakistan alone, it's sub 2%. You look at the amount of credit cards that are in the country, uh, considering the size of the population, which is about 240 million people, with an addressable audience of, say, around 80 million people. It's only 500,000 unique credit cards in the entire country. Um, Bank accounts were solved for, in my opinion. I think you had, though everyone says they don't have bank accounts, they have wallets. The telcos did a very good job at that. And it wasn't the previous decade where that didn't exist. Wallets existed, infrastructure existed. So for me, payments was not the pain point. The pain point was getting access to credit. But how do you do that properly without being blown up? Because giving money is easy, but it's about being paid back. So the problem set that we wanted to focus on was credit. We knew who our target client was, and we said that this is where we wanted to focus. So the idea was focusing on individuals and businesses that cannot get access to credit, and how do we basically build for them. So as I mentioned, we started off in Pakistan as a pure EWA player. Why EWA? Simply because we thought a manual pain point that exists in the country is much easier to digitize than going out and trying to educate a populace of a new product. Copy paste doesn't work in emerging markets. You have to go in and solve for something that is a pain point already, and then allow them to be able to upscale into other products. So EWA, Earned Wage Access, was our key first product, which allowed us to go from an idea to allowing individuals through businesses to access the salary as they earn it. This was important for a few things. One, it created trust. which is very important when you are going down the credit line. Even on the other side, they don't want to just borrow from random institutions or people. Uh, Also, from our side, it was very important to be able to close the loop when it came to being able to be paid back. So B2B2C, going through businesses and allowing their employees to be able to access their salary as they earned it. Over time, that evolved. We grew the business. We went through Y Combinator, raised some more capital out of that, and got our first lending license in Pakistan to be able to expand beyond just earned wage access, but actually started servicing the businesses as well. It was very clear from about 6 months in that the pain point was people were being paid late because guess what? You as a business owner were being paid late yourself. So you had a working capital issue. So we tied in working capital financing in various forms of RBF, revenue-based financing, invoice factoring, to be able to allow for the businesses to have a working capital cycle that allow them to thrive, as well as allows us to open up the books to be able to underwrite the business and their employee base to get access to financing. So that grew over time, and we luckily grew the business fairly well for the first couple of years. We turned profitable within 6 months of launch, which was something which was very important to us, despite it being a time when profitability was kind of looked down on. But it was something that was important as we knew tides turn. We were very lucky enough to raise Series A, led by Speed Invest and Global Ventures in 2022, just before the tide turned. Interest rates went up, and we were able to survive through the downturn, given our profitability profile and localization, and also not having spent a lot of the money that we had raised, which is key. We then expanded out. We knew that Pakistan was a very important market to us. It remains a very important market to us. However, we wanted to make sure that we had geographic diversification from a revenue standpoint because, one, when tide turns in certain markets like Pakistan, Egypt, Nigeria, for example, it can take decades before money comes back. Second, from an operational perspective, it was very important for us to dollarize revenues as well, which allowed us to be able to scale into international markets. So our first foray was into the UAE, and shortly thereafter we also launched in Saudi, and have been able to scale the business fairly well through these three markets we're in, and soon we'll be launching in Oman as well. Now, a key aspect over here, which is counterintuitive, and actually before starting the business, it's something I probably said I would not do, was going into different markets too early in your journey. But for us, being from a much more cost-effective market like Pakistan allowed us to be able to leapfrog ourselves in terms of our growth into the GCC, given that we had a high operating leverage that allowed us to scale without having too much of a workforce in those different markets. So we took our products, and that's the beauty of software as well, and working with regulated partners to be able to go into the other four markets that we're about three markets now that we're going in. So it all comes down to numbers, and I think this is where, over the last 5 years, if you ask me, this is where we would be today, I would have laughed out the room. And it's scary still today that we are here and we're still growing and knock on wood, doing well. We remain profitable. We are now doing over $85 million in revenues on an ARR basis. We have a full regulated banking license in Pakistan. We have lending licenses across our different markets as well, whether it be in UAE, Saudi, and soon in Oman as well, where very soon we should hopefully have the first digital banking license there as well with our partners. And that's something which has been very key for us. We've been very focused on regulation and credit being kind of our moats. Everyone is trying to push on the asset light aspect of things, but the truth is, when you're building a business at scale in fintech, I think it has to be the opposite. It needs to be regulated and asset heavy. So we've got a very large portfolio size now. We've done over 6 million loans since then. We have over now, I'd say, close to 2 million bank accounts across all the countries that we operate in, and the pie is only growing. But luckily, along the way, we've been recognized for some of our achievements. We're the first company out of the region to be, or tech, fintech at least, to be recognized by the World Economic Forum as a technology pioneer. Having entered the UAE as a new company without a track record, within the first year, we were selected as a Future 100 company in the UAE, and also backed by the Abu Dhabi Investment Office as we made our headquarters the UAE, and they gave us again one of the first fintechs an incentive program to continue building out. Al Raida remains a very strong partner for us in Saudi, and we were able to be one of the, I think, first few fintechs to secure a very large facility to be able to continue growing our business. So we've been very blessed and lucky through our execution and recognized for doing so. The point is the gap still remains very large. We've barely scratched the surface. Though we're doing 85 million plus million revenue, though our book size is north of $200 million now, the truth of the matter is we are less than 0.2% market share of what we can actually achieve. One thing through YC they tell you is like you should not build a company if you do not believe that with 1% market share you cannot build a billion-dollar company. And the point is with credit-led fintech in emerging markets and the markets we're focused on, the pie is massive, the penetration is minimal. We can have numerous competitors and we can still build ourselves into a billion-dollar business. So we still have room to grow. I hope that we should hopefully have the same conversation in a couple of years' time, and we should be 3, 4 times the size of where we are today and still would have barely scratched the surface. And that's the whole point. So we are now a diversified platform, neobank, doing everything from earned wage access, digital banking, gold-backed lending, remittance services through lending through a send now, pay later program, to helping businesses with all their working capital requirements. Our plan is that we think, again, that the pie is large and we've barely scratched the surface. And if you look across the world, the likes of Creditas, Nubank, Kaspi, they remain our North Stars. And we have a lot more room to go to be able to build our business from where we were 5 years ago to where we are today. We're nowhere near the billion mark yet, but hopefully within the next couple of years we'll be able to achieve that. We believe that we are able to build, and we've proven ourselves to be able to build at scale, a full stack neobank that's going to serve the under and unserved across businesses and individuals. So in a nutshell, that's kind of where we are and who we are.
Super. Thanks for sharing, Omair. And look, as a first investor in your business, it's always good to see those slides and hear you talk. And I think, one can talk about TAM and theory and strategy and credentials, and we hear that a lot from different companies. But from that deck around those core aspects, you see the numbers. And this is a 5-year-old company printing significant numbers. And that's key for everything you've achieved and the value in the company today and tomorrow. And on the regulatory front, a full banking license in Pakistan this is important in terms of the value today, value creation, inherent value, and what we can achieve tomorrow across the full spectrum of products. So it's been a super journey. I think maybe just to round out this call, let's do just a little bit of back and forth Q&A, just so a bit of flavor, half a minute on each. But Pakistan, MENAP as a whole, maybe just talk about, give us a couple of seconds on the differences and then maybe how they overlap and benefit you as a founder.
Absolutely. So it was interesting when we did expand out. It was something that I was conscious of and what can kill businesses. When you go into a new market, assuming the dynamics of the first market you were in are the same as the other. And there are clear differences. Even what's been more interesting to me is the similarities between certain GCC countries in Pakistan versus the dissimilarities between GCC countries. We tend to paint the GCC as with one brush, when in fact it's far different from country to country. So I think what served us well were a couple things. One, we were able to, from Pakistan, where you have a very high risk factor due to there being a limited level of, I'd say, legal structures per se that you can actually enforce should there be defaults, etc. Moral hazard is very high.
Yeah.
Therefore, your underwriting capability over there almost allows you to step into some of these other markets a little bit more risk on and less worried, which I think was important for us. So we were able to cut our teeth at least in Pakistan over kind of a 2 to 3 period before moving into a new market, which allowed us to learn kind of, I'd say, the tricks of the trade to a certain degree, which was important from underwriting perspective. But the other aspect I'd say, which was very important for us and worked, was that it allows us to have a very low cost base to be able to make mistakes. So when we entered the UAE, until this day, we're less than 10 people. And I don't think we'll ever be too large, to be honest, as a core team across any of these markets in the GCC, simply because we've got a engine room running for us in Pakistan, which allows us to be lean from a cost
Yeah.
perspective, allows us to be very competitive from a pricing perspective with versus our competitors, and allows us to make mistakes without blowing the ship up. So I think that was something which was very important. But in terms of similarities, otherwise, I'd say UAE was very similar to Pakistan because the diaspora that we served and we continue to serve are the migrant workers. So people who are earning less than, say, $250, $300 a month. In Pakistan, that same person is probably earning $1,000 a month, for
Yeah.
example, in the UAE. They have the same problems, same pain points. But the aspect we were able to leverage over there, where Pakistan also plays a really important aspect from GCC, is a remittance corridor. So now having the bank, we've actually been able to really play that full loop. Saudi, though, very different. Saudi, it's been interesting to see that in all other markets, we say we're servicing the blue and gray collar worker, and it's purely for emergency needs. In Saudi, we're seeing that one, we have female participation being much higher than the rest of the markets that we operate in. We see usage for EWA, for example, for different means. It's not just for emergency aspects, it's for purchases, it's for lifestyle.
Yeah.
People, the ticket size is much larger as well. So that's been interesting. And so for us, I think the differences have been more so on cultural uses of product, and obviously the size of the ticket. But the similarity, I'd say, has been regulation. Regulation, this is where we get a lot of respect having now, especially a full banking license in Pakistan. When we go to these different markets, you have to be regulatory first. If you do
Yeah.
not, you think you can build this business or a fintech business without being in front of the regulator, you'll be shut down. So I think that's something which has not changed and only gets harder and harder across countries. I think Saudi is very difficult to operate in because the regulator is a very reputable, strong regulator that requires high standards to be able for you to enter. So you have to be able to kind of conduct yourself accordingly to be able to build in these markets.
Yeah, no, right first is something that we've all gotten used to being front and center of any fintech successful investment. And I guess that kind of feeds into the organic versus M&A strategy because you've married both very well in all across all geographies. But was that something you came up with from the start? It's evolved as it goes, it's opportunistic. How have you found those strategies?
No, look, I think early days, I remember you and I having a conversation about this because there are two schools of thought in this. It's like just go out and remember these are the days where all the books were to move fast and break things, and who cares about regulation,
Burn
etc.
capital.
Yeah, exactly. All that. And so that's something which, in my view, and maybe at that time I could have been, people thought I was short-sighted about it, but was that the moment you get in the bad books of the regulator, it's over for you as a fintech, or at least it takes time for you to build yourself back in the good book. So we were advised early days not to go and speak to the regulator. And when it came to earned wage access, I mean, you look at some of the EWA players in the US, Europe, they were really, until this day, a lot of them still fight the fight saying, listen, this is not credit, this is not credit, this is not credit. Now, for me, I already had an uphill battle of trying to bring a credit-led fintech newcomer to a new market, let alone for me to also then be fighting with the regulator to try and launch a product. So for me, I said, look, we will have legitimacy with regulation, which is important when it comes to trust, which is what we talked about. So we made it very much a motto for us that no matter what, we will go regulation first, even if it takes us a little bit more time. So in Pakistan, we got our NBFC license, and luckily it was in time for us to be able to do our launch. In UAE, we could have launched technically without regulatory cover, but we went with open doors straight to the regulator and said, "This is what we want to do." And they said, "Okay, we get it. You may say it's gray. We consider it lending, but we don't have a license for you. But this is the pathway that you should look at for us to work together so that we don't shut you down." So for me, that was something which is just a non-compromise, because I didn't want to build something and then be shut down. And we've seen that happen now, specifically across the GCC a lot. And so yeah, it was kind of a non-negotiable for us.
Super. No, that makes total sense. I guess from a roadmap point of view, you're one of the leading lights in our portfolio and companies who've engaged with crypto and specifically blockchain in terms of payments rails and other ideologies around the future of finance. And also, maybe you can talk a little bit about that and also your AI strategy because you've been front and center in that also.
Absolutely. So, uh, I have a grander thesis, which let's see if I'm right or wrong over the next few years. Is look, I believe that in emerging markets, that stablecoin infrastructure is going to become the de facto underlying infrastructure, specifically in places like Pakistan, Nigeria, Egypt, etc., and all that, because I think there's just an overall global change when it comes to global monetary policy. But I won't go down that rabbit hole. The idea is that I believe that whether you like it or not, you're going to have to build on some form of infrastructure going forward as a emerging market fintech digital bank, in order for you to scale your business. It allows you to access liquidity pools that you wouldn't have been able to access before. It allows you to build transparency and trust in your overall business because you can real time check what's happening under the hood as opposed to I think the way it's very interesting the way the underwriting is done on books today, which is a bunch of spreadsheets which can be easily manipulated, and I think that's why you have problems that occur. And so for us, we said we want to be able to at least test things out and make sure we're at the forefront of it. And we may be too early, but we don't want to be too late. And so what we did is in the UAE and now in Pakistan, we've applied for a couple digital asset licenses. One is on the remittance side and another is on tokenization. But in the UAE, we were the first company to essentially tokenize our loan book for the EWA portfolio, a portion of it at least, and be able to fund that book with stablecoin. What was super interesting was it was a small pilot of about $2 million, and we're now scaling that to be larger. It worked exactly as one would imagine, and better. The subscription, when we opened up the window for this, it was subscribed to, I think, in under an hour. We had ticket sizes as small as $10 all the way up to
Awesome.
$500,000. So it was very interesting to see and enter that world. I was thrown into I had to do a similar podcast like this about X Spaces, which I had no idea how to even enter, because that's where the world sits,
Yep.
who's in that space. And so for me, I think there's going to for you to build into the future for emerging markets, it's going to be very important for you to be at the forefront of this. And so we're testing, we're learning. I'm not saying that we're 100% certain of what's going to happen, or that we are bulletproof at this point. But it's something where we're saying I think it's been interesting. It's been a successful test for us, and we're going to continue doubling down. On the AI front, it's for us as well has been very much so on operational efficiency at first. I'd say we've been doing this before AI was AI, I guess, in a sense. We from everything from on the operational side when it comes to reconciliation, on the back side when it comes to on the product side as well, personalization for all of our customers, which is done through AI. That's been really interesting. But I think what's been more interesting now has been making everyone internally very AI first.
Okay.
So we've created a separate board, which actually management reports into, where we set the standard and say this is what we expect to be happening. And there's certain KPIs around how you are going to conduct each division as a head of department, for example, and know how what AI initiatives you're taking on. We've brought on independent directors who are very much at the forefront of what's happening in AI to make sure we're not also doing stupid things. I think one thing that is happening a lot, we just came back from an event where there's this whole concept of token maxing happening right
Yeah.
now, which is interesting and useless at the same time because no one actually understands the ROI of it. So what we've been really, I think our team has been very good at is being very efficient when it comes to the token spend and the AI models being used. So whether it be the American models all the way to the Chinese models,
Yeah.
and making sure we're efficient on that. So yeah, look, I think it's a work in progress for us right now. I think there's where we've been able to extract a lot of efficiency out of the business by using the low-hanging fruit like call center automation, like customer support, to QA, and our engineering team is smaller than we ever had, but yet putting out more than we ever have. So
Yeah.
for now, the focus is very much on the automation side, and I think the next level is going to be how we use it to be able to continue building on our new customer base through bots.
Super, love it. Super logical. Look, maybe last one for you, Omer, and just one for our investors because obviously there's VEF the investor, and there's Abhi the company, there's you and there's me. I'm on the board. You're the CEO. You're also on the board and found the company. Maybe just a few words and sharings about our journey together, or how we interact, how we lean on each other, help each other, and it's both ways clearly. But just from your side.
No, but look, one, we wouldn't be here without you, without VEF. Overall, this was literally an idea on a paper napkin, and if it wasn't for your first check to say, Omer, we're here to back you, this never would happen. So I think that's just the first stepping stone, and we're hugely thankful for that. And it goes back to even before when I was at RenCap, you put your hat out to and foot out to be able to support me then, and I think the same thing happened again this time, and I just hope we continue to make sure we do you proud and all shareholders proud. But then going along the way, I think what's very important and has been a really saving grace for me at least has been and you always underestimate these things but I remember when I started and typical as ex-banker blah, blah blah, you go down the rabbit hole of just ordering a bunch of books and think that you can learn how to be an entrepreneur by reading a bunch of books. Like everyone said, yeah, read the hard thing about hard things and this and that, and I read them all. I read Zero to One, you name it. um and none of that applies until you're going through it and you're like, shit, like
Yeah.
I read it all, didn't matter. And what's important, I think the most important is it's a lonely journey. It's a very, very lonely journey. And I never understood the board dynamics part of managing a board, which I'm still improving on and trying to work on. I'd say is the conversation aspect of it, is a sounding board. And I think that's where you and VEF overall have just been so spectacular because we've been able to, through good times, through bad times, and there've been a lot of bad times, is just getting a call and say, hey, look, this is happening. You will have a purview because you've seen this happen across other markets. You'll be able to connect to people who've gone through it before, or even just yourself saying, look, how do we work through this? And I think that's something which is really important through the journey, is having someone who doesn't feel like a reporting structure. It feels like a friend. It feels like someone who's there to back you, but not just yeah, to kind of praise and give you unwavering support. You've pushed back on areas which I wanted to do, and rightly so. And we'll have our arguments, but
Yep.
that's okay. It's constructive work together to be, because the ultimate goal is to build something of significance. And so, yeah, I think those are the key aspects I say which are important. And look, the rest goes unsaid. Is your access to Speed Invest coming in as our Series A co-lead would never have happened if it wasn't for you and the introduction that happened there. Some of the other things which we're building around capital, etc., wouldn't have happened if it wasn't for your network of people as well to be able to support us through that journey. So, yeah, I hope that
No, no, it was a
yeah.
very loaded question, but I I do appreciate all the kind words. And look, it's two-way, and you have, rewarded us, obviously, both from a journey, value creation, and our shareholders. So it's a two-way street, and we're very grateful. And we enjoy the journey, and it's never a straight line, especially in emerging markets. But that once you're going directionally positive, the volatility comes, you can get through most things, especially the delivery you and the team have done. Look, I think we're at a wrap, Omer. What I'd like to say is thank you for your time. Obviously taking time out to do this for us and our investors. And it's a first. After 5 years, you should have done it before. But now you're on the radar. They will see this. They'll come at me. They'll come at you with questions about your story. Because I see you as a bright light in our portfolio, which is what I wanted to do with this
Thank
interview. But also thank you for the journey so far. All the work. I know it's nonstop for you and the team. And the value creation you've done for us as investors from that first check that we did 5 years ago. But thank you, and we will talk again soon.